Okay, so looks like we are live, and I see we have some of our attendees here already. Hope we didn't keep you waiting too long. Sorry, Vincenzo and I were just talking about a few technical issues I was having for the first time on this platform. Now, I think we've got our audio all sorted out. If you
Yeah.
want to go ahead and just test that it's working on your side, if you're on a computer, you should see on your right-hand side, and if you're on a phone, you should see down at the bottom a little menu where you'll see chat bubbles. You can just go ahead and send like a quick chat saying hi, why, I'm here.
We made
You can
it.
just go ahead and do that. Made it, and then that way we know that you're here. I also am pointing you out to that to let you know that if you have any questions, that will be the place that you can submit questions, either just privately to us. You could also send them to everyone so that everyone can see them. So just as a brief introduction, this is a chance for those of you who don't know me to get to know me, those of you who don't know Vincenzo to get to know Vincenzo. We really haven't prepared anything to make this a dry and boring tax presentation like I'm sure you've heard dozens of before. So I wanted to really keep it as a relatively casual Q&A format for those listening. We still haven't gotten any why anyone saying anything in the chat yet. If I could please ask you, if you can hear me, please go try and find that chat section. Vincenzo has just said hi, everyone's
Now
here.
I know it works. Yeah.
I've just done as well, so we'll see how that works there. But anyways, technical issues aside, we can go ahead and get recording on our conversation. So, very brief background. I think we were debating last time. How long was it since we actually met here in Hong Kong? Okay, good. Now we got those messages saying they can hear us. Now we know we'll have lots of those tough questions, as like you were looking for earlier. So it's been, I think, what, about 7, 8 years since we last met with you here in Hong Kong, and I think since then you're probably one of the few people who's traveled more than me. Is that right?
Yeah. No, I've been around. So, mostly in South America, but Asia, Europe. So it's been a good run.
So, for anyone here who may not know you, can you please give me just a quick summary of your background? What have you been up to? I thought you were a boring old tax guy. What are you doing in all these interesting places? And
Yeah. No, so I mean, my background, I started in the Big Four, PricewaterhouseCoopers, essentially doing, valuation, accounting, et cetera. And then roughly 10 years ago, I went independent, started a firm called Online Taxman, and then also another firm called Global Expat Advisors. And what we do is, we do tax preparation primarily for U.S. expats, so Americans living abroad, as well as foreigners that are looking to invest in the United States, whether it be in the markets, whether it be in real estate, so on and so forth. And then, sort of a subset of that, we got into Global Expat Advisors, which is sort of this like, structuring side of our business, right? So, setting up offshore structures for, asset protection, for tax optimization, for, even foreigners that are looking to invest in the United States, but need to potentially prevent any sort of inheritance tax. Really just setting up structures around the world, bank accounts, et cetera, for people. And so those two online businesses have been able to essentially, allow me to travel, meet clients, just explore opportunities around the world. And so it's sort of a little bit of a business and pleasure aspect of what I do for a living and getting to go to all these cool places. So,
well, I certainly think for many of us that is kind of the dream lifestyle to be able to to do that, to serve clients around the world, to live around the world.
yeah.
And so, of those two businesses, what have been the growth trajectories of those two? Have they been relatively even? Has one been growing faster than the other?
The online tax map was sort of the initial one, right? And that's sort of our bread and butter of doing the planning and the preparation for people and just helping everyone with these just day-to-day tax issues that they encounter, right? And questions and everything. And that's grown, really smoothly and done really well. And we have a whole team now, et cetera, which is different when we met in 2013 and I was sort of a one-man show. Now, and then Global Expat Advisors is sort of a newer brand. It's emerged over the last, 3 or 4 years. And that's also done really well, again, and these sort of, bigger projects and bigger clients, et cetera. And so they're sort of different trajectories, right? Where, the online tax has sort of grown smooth and rise steadily, and Global Expat Advisors sort of, had a big uptick, but it's not, we don't get those sort of clients every day, if you will. So they've both been really interesting. I mean, I love, getting down to the details of a complicated structure and really trying to, create value for somebody. I mean, I think that's super rewarding. But like I said, I also like just helping regular people with their taxes navigate these issues, and getting to meet them when I go and travel to these cool places. So that they're both like my two kids. You have kids, so you can't really say you like one over the other. They're just different.
Well, though I can objectively say which one's growing faster and which one's gaining weight, gaining more weight, which one's I guess
That's
different.
true.
That's you, but you know me. I'm a numbers guy. I always like things that I can measure, and I don't
Yeah.
have to say when I like more. I can just simply say which one's bigger or smaller. So on the first one, on the online tax man, doing taxes for Americans over. So we'll divide it into two categories. So Americans who are outside the U.S. or foreigners who want to invest in the U.S. For Americans outside the U.S., what have you has seen as the biggest surprise or the I guess I'll use the word surprise, either for you or for the clients in terms of what what they've needed from you. There are things that they've been most glad that they met you.
Yeah. I mean, listen, I think there's a lot of misnomers about, what assets they have to report abroad. What, um, what's deductible and sort of how it works as far as, being a foreigner abroad and like foreign tax credits, et cetera. And just, yeah, just the tons of misinformation out there,
Mm.
that people encounter over the internet. I mean, Google could be sort of your best friend and worst enemy, right? Because people really get caught up in just Googling everything and trying to find the answer. And then there's conflicting answers, and there's sort of, chat and message boards or like Facebook groups, and you got like 10 people responding with different answers, etc. And so I think it's really just trying to like clear the air on even some of the more basic concepts of, okay, you know if you have $10,000 abroad in a foreign bank account, you have to file the FBAR, right? But even if it's two accounts, and one's at 5,000 in June and then the other one's at 6,000 in September, the combined balance is 11,000. You have to file the FBAR. But people think, well, I could just have a bunch of different small balances in these accounts. I don't have to file it, but you do,
You
right?
still have to
So,
do that.
there's all these sort of just, I think people hear what they want to hear. And, because of that, they sort of just get it wrong, right? I mean, I don't think there's a problem with like doing it yourself, if you will, but you have to also be just very aware of everything, and maybe you want to use a professional like the first year or whatnot, and then do it yourself, etc. Because I just see a lot of people that try and do it themselves, and then get it wrong, right? And
Hmm.
then we have to go and amend it, and then there's risk there, and so that's a lot of what we do is almost like a little bit of like cleanup for people that didn't do it themselves, or even didn't even file because they didn't think they needed to file, or maybe they went their US CPA, and they're a really good CPA
Hmm.
when you live in the States, but then when you move abroad, they don't know as much. So yeah, lots of cleanup.
I can certainly understand that. What would you say was the biggest shock you've had when someone has brought you what you now would call a cleanup job, that you'd almost shake your head and say, "Do not make this mistake."
Oh man, I mean, there's just a lot of, again, the way that the foreign earned income exclusion works, and you see, I don't know how this even is done on the software, but you'll see like people with like, large, like just like losses, right?
Mhm.
So you'll see the foreign, like I make $100,000, and I'll put that on one line, and then then you're supposed to do $100,000 that's sort of deducted, and that's what the foreign earned income exclusion is, right? The foreign earned income exclusion being, when you're an expat living abroad, you get the first what's now $105,000 tax free. But you'll see something where I don't know how it works, but they'll just have like a full $100,000 deduction, and it'll just be like they have like a net loss on their whole return. I mean, like really weird, funky stuff where you're like, I don't know how that even ended up happening, you know. And then stuff with the if they're reporting a foreign company and how that works, and some of these really difficult forms that people you know try to do themselves or whatnot, and yeah, they get totally butchered. Really, it's sad.
So
I mean, it's
on the other side of
tough.
the online tax man, so I'm sure we could spend hours just talking about some of the different scenarios, because I've certainly realized too, it's not just all expats. You are talking about expats living in different places. Like here in Hong Kong, we don't have a tax treaty, but also taxes are very, very simple. Hong Kong doesn't tax offshore income, no capital gains, no tax on dividends, and so on. It's fairly simple. Whereas someone who lives in a very high tax jurisdiction with taxes much higher than the U.S., and then foreign tax credits and treaties can mean a lot more. I can't imagine what it would be like for someone who lives like in a small high tax country where there's maybe no tax specialist or nobody who understands the treaty. But I'm sure you get those kind of inquiries all the time.
Yeah, yeah, no. I mean, I think the tougher part is, again, when people live in a a country like the UK or Europe, et cetera, they're getting taxed locally so much, so it sort of just offsets it, and then they have a bunch of foreign tax credits that they could sort of roll over if they do move outside the UK or whatnot. I think the tougher is for the people that do live in a place like Hong Kong or Singapore where they do pay low taxes, and then they're as an American they're looking at their Australian or British or Canadian counterparts that don't have this tax on worldwide income, and they're essentially having to pay the U.S. government, right? And I know a lot of people have conceptually problems with that. That's why we do see a lot of renouncements in places like Hong Kong and Singapore, or there's other sort of smart tax planning ways to do it potentially if you do have a non-resident spouse, right? A spouse that's not American, by putting assets and income producing bank accounts or brokerage accounts in the name of your foreign spouse so that you don't have to get taxed on those dividends, et cetera. Of course, you want to be able to trust your spouse, but as long as you have that out of the way, like it's one of the best tax planning strategies there are, is by putting assets in your non-resident spouse, or renouncing, or just biting the bullet, or obviously contributing to an IRA, contributing to these investment retirement account options. But there is a definitely a disadvantage sometimes of being an American abroad in these low tax jurisdictions.
Well, I think I certainly felt that way when I first got out here. But then, yes, of course, the more and more I learned about that specific situation, and as I mentioned, it's not like you can just apply to expats generally. I feel now that's why I've become one of the most knowledgeable about IRA and 401k plan and defined benefit or RISA plan. I mean, all of
Yeah,
these other shelters, which even most
yeah,
tax specialists I speak to haven't gone into as much detail on. Of course, I'm quite patriotic. I always, shed a small tear when I hear someone's even thinking about renunciation, especially when there are all these other
yeah.
strategies you've
It's true.
mentioned.
Yeah,
And
no,
I think I've told you that the least romantic thing I've ever called my wife is my $157,000 a year Roth IRA. She doesn't like being called that. Um, but effectively that's what it is, right? I mean,
yeah,
so we've got the annual gift tax exclusion I could give to anyone, but then I've got
right.
a larger exclusion just for my foreign spouse, and that's
Yeah,
one of the most important tax planning strategies I think we often talk about is if you have one American and one non-American, it's
hmm,
actually a very special planning situation for who owns which asset, Because on the
Yeah.
flip side, do you want to talk about any of the pitfalls of a foreigner who maybe gets gifted or owns the U.S. asset and now finds a few nasty U.S. tax surprises on that side?
Yeah. Well, it's funny because that is actually a very common question that a lot of people have is, well, hey, I am, receiving an inheritance, or this is, for a U.S. tax person that receives an inheritance, from, a foreigner. And it's like, well, am I going to get taxed on this? Because I'm receiving a large, sum of money from my parents, they're gifting me, etc. And it's almost like the opposite, right? As far as, the US wants money to come into their sort of US tax system,
I
right?
bet.
So, merely by receiving money from, non-US person, there's no tax on it. If it is over $100,000, you do have to sort of do a gift tax return to show that, hey, this money's coming in, to just make sure, let the U.S.
Mhm.
know that this is legit, etc. But once you receive that money, it's not taxable. Obviously, if you're putting it to work, if you're investing in it, investing it, so on and so forth, then you're gonna pay tax on that income, so to speak. But the U.S. loves when money comes into their tax system. They obviously like to limit it, when it leaves. And you're right, that sort of NRA spouse gifting exclusion that you have annually, again, is a great tax planning tool for people to, get smartly, wisely, get money out of the U.S. tax system, put in the name of a foreign spouse, so you could plan better. And you're right, along with sort of the IRAs and all these sort of tax advantage accounts that are available to Americans. You can really strategize and really optimize, if you will, your taxes and your tax planning. It just requires being smart and strategic about it. That's it.
Well, and it's also what I said too. We've talked a little bit about IRAs, but once you start introducing 401k plans and ERISA plans, I've often said those are some of the best and most powerful investment vehicles on the planet. Because
Yeah,
I talk to Hong Kong residents here. Well, they'll buy a U.S. stock, and then they'll see a 30% withholding tax on their dividend, and then heaven forbid you pass away with the U.S. stock and not know about the large estate tax liability should you hold more than $60,000 of U.S. asset, or buy a piece of U.S. real estate and then find out about FIRPTA. There are all
yeah,
sorts of these. There are all sorts of investments where it's actually better to own them as an American. And then that's where you find with mixed
right.
couples, you say, well, this is what the American should own, and this is what the
Yeah,
non-American should own. And especially for the American, uh, I would say, the other term is, of course, I've got my $157,000 a year Roth IRA that I'm married to, but then I also have the actual IRA accounts. Those are the best places to buy real estate investment trusts and other things, which otherwise are very tax inefficient for anybody. And so if you have the ability to
yeah.
compound returns from those tax free, by all means do that.
Yeah, no, that's right. I mean, that's sort of my general, broad-based advice. Obviously, everything is always dependent on the situation, but it's like, well, if you're an American, yeah, you have this sort of dual spouse household, one being American, one not. As an American, buy the U.S. real estate in your name, right, to avoid FIRPTA, to avoid the sort of inheritance tax issues. Buy those stocks that there might be dividends, et cetera, that, dividend paying stocks in the American name to avoid the 30% withholding, et cetera. And then the foreign spouse can, have that sort of those capital gains, or maybe even, those brokerage accounts that are outside the United States, and sort of do that. I mean, I think another tax planning strategy, or just another, I guess, type of IRA that we haven't mentioned, is the self-directed IRA, right?
Hmm.
So, self-directed meaning that, obviously, one can invest in the public markets, and one should, of course. But if anyone who wants to look at, alternative investments, right, being, U.S. real estate, or even investing in a fund, or if you sort of have access to any sort of venture capital investments, or even if you're a crypto expert, and you sort of have an in, or you like alternative investment strategies, you can convert your IRA to a self-directed IRA, and and invest in these type of investments under your IRA, right? It's also known as like a checkbook IRA, if you will. And how that works is you could essentially roll over your IRA into one of these custodians, and then have an LLC underneath that custodial account. So basically, you end up putting all the money into this LLC IRA account, right? And then with that LLC, you can write checks to invest in certain projects, whether it's real estate or funds or whatever. And as long as those accounts are, or those investments are on the name of the LLC, and you're not sort of commingling funds. So if you do have a real estate investment, essentially the rent is going into the IRA LLC. All the expenses are coming out of the IRA LLC. You can't be sort of using that real estate, that house, sort of personally. You can't really sort of benefit from that real estate investment. But if you really follow the rules on that sort of investment, it's a good way to use your IRA money. I mean, I've done it personally with assets. I own a couple properties in Medellin, Colombia, that I've sort of used and have benefited by using that the self-directed IRA, right? Because in Colombia, you cannot get you can't get any sort of financing. So it's sort of like, okay, well, if I can't leverage credit like I could in the States, let me use my IRA for that investment. It's worked out well. But again, I mean, there are a lot of rules behind behind using the funds or whatnot. And as long as you sort of play by the rules, because you don't want your IRA to essentially blow up, if you will, by not following those rules, it's a great strategy. I think that again, not a lot of people sort of know about, to again, use your IRA in those alternative markets.
Yeah, well, as you can imagine, I have a hard enough time even trying to get people motivated to contribute to their IRAs in the first place, or to set up 401k
Yeah,
plans.
that's the first
I
step.
do you
Yeah.
have do you also meet lots of Americans overseas who don't know that they can contribute to an IRA, or don't know that they can set up a 401k plan?
Yeah, you know what? I mean, a lot of people that, yeah, again, they don't know about that, or they don't know that, hey, you can, even though you have, you're operating from a foreign company. Let's say you have your own business abroad. You could still set up a U.S. SEP or solo 401k for your foreign business. Contribute and max out, up to 25% of your sort of income, your salary, to a SEP or to a solo 401k, and so on and so forth. I mean, there's a lot of people that sort of don't connect the two, right? And say, okay, well, but my business is foreign, but you could still contribute to a foreign or a U.S. plan. Again, you could, if you're older, and you mentioned this, doing like a defined benefit profit sharing plan. I mean, I've seen people, whether abroad or even in the U.S., literally, be able to contribute, hundreds of thousands of dollars, to these type of plans. Again, because with the defined benefit plan, it's based on actuarial analysis, so your age. So the older you get, and if you are making significant money,
Mm-hmm.
you could contribute to these plans, and it really is, again, putting away hundreds of thousands of dollars, which is again, saving tens of thousands of dollars on taxes. And I mean, it's a great strategy that not a lot of people really know about. And again, especially as an expat, sort of assume that it's not available to them because they live abroad, and that's just not true, right? So yeah,
Well,
there's a
and
lot of
I
strategies.
often
Yeah.
say that's the flip side of the global tax system, is that you have the global tax net can catch you, but at the same time, you're never unplugged from it in terms of what you can contribute. Like, I think of let's say my
Right.
UK friends, yes, they may not have to pay UK tax, but they also can't contribute to an ISA. They can't contribute to their SIPs while they're abroad. My Aussie friends, when they're over here, they really can't do anything with their superannuation because
Mhm.
superannuations have to be controlled from within Australia. Whereas here, we have no problem setting up a 401k plan or a defined benefit plan for Americans who live outside the US. And especially when you talk about, renunciations, if you're making 500,000, even $1 million US a year. And yeah, that could be a pretty big tax bill, but these plans can let you really save a lot of tax out of that. It can really take a big bite out of what
Yeah.
that tax bill would be, especially if you also have the benefit of not paying state taxes, which we also tend to get used to when we don't have state affiliations anymore.
Yeah. No, exactly. I mean, like we sort of said, if you plan correctly, especially if you have your own business, you could certainly save a lot, right? And I think it is sort of just being smart, obviously, working with the right providers that know this and know that you can do these strategies, right? And if you're able to do it, it's really not a big difference between um, being an American or being another nationality living in a low tax jurisdiction like Hong Kong.
Oh, well, except again, for the flip side, when you've got those investments in the US, there's no better place to have them than in a US qualified plan. Even a Hong Kong person can't get those advantages.
Yeah, no,
So
true.
it's very much a two-edged sword, and I spend a lot of time describing the two edges of that sword. So if we can talk a little bit about the other side of the business, we so far talked about your tax planning, tax preparation, and you also mentioned some of the structuring services, which you may have mentioned is your other child, if you
Yeah,
will.
yeah.
Can you tell us a little bit more about that and what some of the solutions you provided there are?
Yeah, so as you sort of alluded to, one of the solutions we do provide is for foreigners that do want to buy in the United States, right? Particularly with real estate, and so as you sort of alluded, there's a rule that if you have over $60,000 in U.S. situs assets, right, that really predominantly means real estate and just U.S. corporate stock, right? So Google's and Apple's of the world. If that is over 60,000, you could potentially be subject to inheritance or estate tax, which could be up to 45%. So the way to avoid that when buying real estate or these sort of assets is by owning it in a foreign company or a foreign trust. And so particularly with real estate, we might do something where there's an LLC that actually purchases the real estate or a USC corp that purchases the real estate. And then that is ultimately owned by a holding company abroad. That might be in Hong Kong, particularly if somebody might already have a Hong Kong holding, or we set up in a place like the BVI. Cook Islands is another place for asset protection, so on and so forth. But we sort of do these structures again for people to really just avoid that inheritance tax. Of course, if it's an income producing property, they still have to file the a tax return every year to show that income. And also, as you mentioned earlier, if they end up selling that U.S. real estate, there is sort of FERPTA withholding, which essentially is a tax on really withholding tax that you could potentially get back for selling the U.S. real estate and the associated capital gain. So that's one area that we do a lot of work in. And then the other area is for Americans living abroad, especially a lot of, entrepreneurs that have their own business, whether it's, sort of in a particular country or just sort of, quote unquote, like digital nomads that are living around the world. And if they have a company or they have a business that's fully online and they don't have any sort of U.S. employees, U.S. office, warehouse, etc., we can set up a structure that's very similar to what the Googles and the Apples of the world have done, where what used to be actually where they could keep the money outside the United States and get tax deferment. That actually changed a bit with the Trump tax plan, and now we're able to sort of get them an effective tax rate of 10.5% by having a C corp that owns a foreign company. And again, by doing all the business through that foreign company, their effective tax rate is 10.5%. And they could, essentially pay themselves a salary up to the foreign income exclusion of $105,000. If they have a spouse that's also working, with the business, they could essentially pay the spouse the exemption. And so, again, for people that are living abroad, operating their company completely digital, and it is a quote unquote real company, meaning that they have employees abroad and it's functional, etc. It's not sort of a one-man shop or whatnot. Again, we can sort of achieve that low effective tax rate. And so, again, this is sort of a strategy that a lot of entrepreneurs do take advantage of if they qualify. And sort of we, sort of like evangelists, if you will, as far as trying to let people know about these strategies that they might not be aware of. I think the other side of it too, for quote unquote digital nomads, if you will, that are not American, is just setting up a U.S. LLC, right? And so a lot of people don't realize, but the U.S. is essentially one of the largest tax havens for non-U.S. citizens, right? So if you're a non-U.S. person and you have U.S. clients, you could be sort of a developer with sort of a team in your home country, an offshore team, or any sort of thing, and you again have non-U.S. clients, or sorry, U.S. clients, you could set up a U.S. LLC with a bank account and essentially pay zero tax. And so we've sort of helped a lot of these entrepreneurs as well set up these LLCs, do the filings year after year, and save a lot of money because they don't have to pay tax in the United States and still get access to all the banking and the benefits of doing so.
That's something you might have to explain a little bit more, because when you perk up and you say you can set up a U.S. company, do business in the U.S. and not paying any tax, that's like, whoa, that sounds, especially when you say most of us don't think of the U.S. as a tax haven. Can you elaborate a little more detail there?
Yeah, sure. I mean, basically, for non-Americans who are, don't have any U.S. Again, employees, offices, warehouses, etc. But they, let's say, service U.S. clients, they can essentially, have a U.S. bank account. Their clients could pay into a U.S. bank account, but because it's not owned by any U.S. citizens, it's not. It doesn't have any, again, U.S. effectively connected income. They can essentially, operate these U.S. LLCs and not have to pay any U.S. tax on it. And so, I mean, a lot of people that are into, programming or any sort of, service-based business, et cetera, or even, startup, whatever you want to, call it. Again, as long as it doesn't, follow these sort of, rules and not have any U.S. presence, they can use the U.S. as sort of an operational entity and not pay any U.S. tax on that. Of course, there might be potential local tax implications, and that sort of goes into where they're residing and are they a tax resident of XYZ country. But at least on the U.S. standpoint, as long as they don't have any operations in the United States, they're a virtual company. It's fine if you have like a virtual office address, et cetera, but by not living in the United States, not having U.S. employees or offices, you can qualify to and not have to pay any U.S. tax.
And that's especially surprising when you even say you can even have U.S. customers, just not U.S., I think, what you might call nexus. So
yeah, exactly. No, that's the thing. I mean, you could have U.S. customers, you could have a U.S. credit card processing and get paid into a U.S. bank account. But I think ultimately the U.S. wants to attract people to do business in the United States. They want to attract people to have U.S. bank accounts and have U.S. dollar denominated the bank accounts, and ultimately too, have an investment account in the United States, right? I mean, and a lot of people sort of say, okay, well, I'd like to have a U.S. bank account, but ultimately I do want to, build my nest egg up in the United States and have a, U.S. Brokerage account and sort of, invest in the United States and the markets there. And so, you do find a lot of people that sort of want to build their wealth by investing in U.S. assets, et cetera. And so, that's sort of a good gateway to do so by, setting up a U.S. Business that they're not paying tax on and accumulating some wealth in the United States. So it's I think it's a good avenue for people to do that if they're, if that situation is what they're in.
So what is your recommended best practice for a foreigner who maybe has never even set foot in the US, has no other US connection at all, but wants to have a US brokerage account?
Um, yeah, I mean, I would say, listen, if as long as you have good advisors, I think it's very easy to set up in the United States. I think it's, compared to a lot of jurisdictions out there, it's very cheap, cost effective to set up a U.S. company, to set up a U.S. brokerage account. I think that's sort of one of the biggest advantages of doing it. And even the compliance side of this. I mean, even compared, and I like Hong Kong as a jurisdiction. Yeah, I still recommend Hong Kong to people, especially even despite what's going on there. People ask me, well, all the time. I operate a Hong Kong company, and but I think on the other side, which is if you are again a non-American, I recommend the USLC because it's actually cheaper than a Hong Kong company. It's not subject to the audits,
Audit.
etc. And so again, I think it's a great alternative, and it's like I said, quick, easy. You could really get the company in a matter of days. The EIN number, which sort of the tax ID number with the IRS, also very easy to get, although it's been a little bit of a lag with Corona, but you're still talking about a couple of weeks as opposed to other jurisdictions where we're open and could take a couple months for especially for banking. So the time and cost of doing business in the United States, I think, is still very much one of the best in the world. And that's very appealing for people. So yeah, we do recommend it, and it's worked out well for a lot of our clients. But I think it's the, being the evangelical and letting people know about this stuff. I think that's part of what, our job is, and, what we sort of do as far as getting the knowledge out there because people don't know about it.
Well, and especially it's interesting when I said, what do you recommend as best practices for opening a US bank brokerage account? Please do have for the record that I did not ask him to say have good advisors.
Yeah,
Because yeah, we've been talking a lot about your recommendations, and not quite so much about what I do on the flip side. So to anyone for whom it's unclear, we actually do not compete with each other at all. We're very much
yeah,
complementary. Vincenzo very much on the tax side. I'm very much on the investment side. But to the extent that we can't really ignore each other's worlds in the sense that obviously every time I make an investment, there's a tax consequence. Certainly when there's tax saved, there's the two meet each other, and you can't
yeah,
completely.
exactly. Our worlds collide all the time. I mean, it's just it's part of sort of being in the service business and also working with quality people, right? So
And one of the things I've realized, and I don't know if you found the same, certainly as we've been running our businesses for more and more years, that it's one thing to plan from year to year, but then when we start seeing the effects of having some planning, some good tax strategies, how those can compound over 10 plus year periods, those are far more significant than I think even what we planned for on it. We talked about our STEP IRA, say 50,000 here, say 50,000 there. But,
mhm,
over the course of, 10, 15 years, that's over $1 million. And, so that's
right,
a heck of a lot of tax-free investment that you can make,
yeah.
once you start adding it up over time.
Yeah, no, I agree. Like I mean, the investments or the retirement savings accounts in the United States, I think, again, if you contribute and you're sort of adamant about maxing it out, et cetera, it really does compound, and it'll never go away. And regardless of where you live in the world, you'll be able to save on that. So, yeah, I think that's sort of, like I said, it's just getting the word out. Which is obviously what we're trying to do here, and just continue to do, because I think there's just a lot of misnomers out there, and that's what I've sort of seen over the years.
So before we open up for Q&A, I want to ask you one question, which is likely to be, kind of on the top of the mind. And of course, we'll replay this a few months and see how well it's aged. You're there in the US, and I'm out here in Hong Kong looking at it from overseas. You talk about what's going on over here, but in all fairness, it's actually quite peaceful over here. I mean, we can't go to restaurants after 6 p.m. and our beaches are closed, but we've got a double-digit number of deaths and a very low threshold for any sort of cases here. I've heard over there in the U.S. you've actually got an election you guys need to prepare for, and there are different different temperatures that you get depending where in the country you stick the thermometer right now. How are things feeling where you are right now, and what sorts of political risks or tax preparation strategies are you preparing for, given how the election might go?
Yeah, no, well, here in New York, it's just it's an interesting place, right? I mean, obviously, from the Corona thing, things are going well. As the media sort of always just sort of, makes this just level of negativity and scandal that you sort of, you see when we look at Hong Kong and everyone's scared there. You see in the States where there's just a bunch of just negativity. Overall, obviously, it's going to be a really interesting year election wise, and I still feel that we don't really know what's going to happen. But clearly, if there is a change, and Biden does win, then there might be changes to the tax law. I don't think it's going to be an overhaul per se, especially because there really was a very extensive overhaul in 2017, but there could be some changes. I think particularly, the easiest change is in the estate tax. And so right now, it's essentially, above $11 million as far as, being able to, get the lifetime exemption, or when someone were to die. The first, I think $11.5 million of assets is given tax free, or if someone, again, wants to, gift assets in their lifetime to another U.S. person, again, they have this sort of $11.5 million exemption, right? And so, that might change. In fact, that's probably the easiest thing to change, is to sort of, go after the top and just say, hey, let's get this down to, 2, 3, $4 million dollars, again, and sort of do that estate tax, lower that exemption. And so that I see as sort of like the biggest thing. I mean, sure, like, the income tax rates could go up, the individual level. I mean, the corporate tax rate is super low, 21%. But again, I think that it'll be a real piecemeal change, and I think that estate tax exemption was probably the first to change. And so I do recommend clients that are sort of thinking about succession planning and saying, well, I'm getting up there in age. I want to gift certain assets to my heirs. I think that is probably the biggest thing to be done, sort of in anticipation of the election, or let's say the second half of 2020, is doing that, making those gifts, be it to your heirs, setting up a trust, so on and so forth. I think that is probably the biggest thing that people could do, because that will probably be the first thing to go, and the easiest thing to plan around, right? I mean, you can make those decisions. You could retitle those assets, open up those brokerage accounts, et cetera, and do the formal gifting to your heirs now, because who knows if there is a change, that could be there could be a very low exemption for the next 4, 8, 10 plus years, and obviously we don't have a crystal ball, but we do know that, at least through the end of 2020, there's not going to be a change. And if you do have significant assets, above, that $3-4 million threshold, you might as well do it now if you sort of have that succession plan in place.
Oh, yeah.
Yeah.
Well, that's something that's definitely keeping a lot of planners busy, and I think you'd almost think that geared towards where voters have a degree of enthusiasm about it, but
Yeah.
a lot.
I was going to say it's funny too, because when people are asking, and I've talked to other sort of tax lawyers, et cetera, and people are like, oh, are you really busy? Especially during the peak of Corona, everyone's like, are you really busy? Are you guys lacking for work? And it's like, you know what? We've been so busy with just not even the regular tax work, but a lot of the estate planning work. A lot of people are like, oh, I want to put together a living trust. I need to redo my will. I mean, it's sort of that. Just the fragility of life, if you will, that this pandemic has sort of had people realize. And also, so it is sort of, hey, if you want to plan your estate, it is sort of the time to just remind yourself, hey, estate planning is important, because no one knows, when they're going to go. Unfortunately, we all want to, live well into our later years, but, sometimes things happen, and you want to make sure that, that everything is sort of just, set up for your heirs and whatnot. And avoiding sort of probate, or at least just making it a clean transition, if you will, for them, both on the tax side and then just on the life side. I mean, that's it's a tough scenario for anyone, and you want to make sure that things are going to be smoothly when we're all gone.
Well, it's interesting how you put it, because what I often say is income tax is actually pretty easy to avoid. You just have to not have income. But the
Right.
problem is it's much harder to avoid estate tax, because to do that you have to not die. And so obviously some of the structures that you create, basically what you're doing is you're creating immortal holders. So someone that can hold something that and that entity that holds the assets doesn't die. And that in a way was kind of one of the oldest tricks. I mean, that was why you saw that huge rise of Irish and Luxembourg UCITS funds for foreign investors. Because if you want to own the S&P 500 now, instead of having to worry about that, you just buy an Irish fund. That Irish fund will never die. And I've often pointed out, why is it that you think Ireland is like the fourth largest holder of U.S. Treasuries in the world? It's not because the Irish are notorious for saving. It's because they've got funds there which Chinese and all sorts of other investors put money into, and they just happen to be domiciled in Ireland.
Yeah.
So some fascinating bits there. So I see we got a few minutes left here, and I've noticed we're starting to get a little bit of Q&A now. Can you see the questions down there, Vincenzo?
Yeah, I could see it.
Okay. Shall I go ahead and read it to you, or do you
Yeah,
want
go.
to?
You could read it so eloquently.
Certainly. So we've got the first question down here said, are there advantages to a U.S. citizen setting up a brokerage account outside of the U.S.? If so, what types of investments are best for keeping in a foreign investment account? And my own addition, he didn't ask this, what are the worst investments to have in a foreign brokerage account?
So, I mean, my take is there aren't really advantages or disadvantages of setting up a brokerage account outside the United States. I mean, I think that the advantage, if you will, is you do have access to obviously potentially investments that some of the non or some of the U.S. brokers might not have. So I know in Hong Kong, there's like Boom Securities, or there's these sort of different brokerage houses around the world that give you access to some investments that maybe aren't on a traditional U.S. brokerage. I think obviously when setting up a foreign brokerage, of course, then you have things like reporting on your FBAR, 8938, which is another tax form for people that have high a lot of foreign financial assets, right, in the two, three, $400,000 range. And so again, you can it gives you access to foreign investments, but then you just the more you sort of invest outside the United States with these foreign brokerage accounts, the more you have to report them, or you might tip the threshold to report them. So as long as you're okay doing that, then I don't think it's an issue, right? But of course, yeah, you just have to know these reporting requirements. And of course, if you're earning money in these foreign investment accounts, of course, you have to report that as well. But that's also why if people that have a foreign spouse, they sort of say, hey, you know what, I'm going to have the U.S. brokerage account. I'll put the foreign brokerage account in my foreign spouse's name. And then, of course, I don't have to report that asset. I don't have to report the income. And that's obviously, sort of what we were talking about before, about using your spouse to your advantage.
Exactly. I would have probably answered even a more straightforward answer. I would say, why would a U.S. citizen want to have a brokerage account outside the U.S.? Most foreigners want to have the brokerage accounts in the U.S. U.S. brokerages, in my experience, are just some of the best, most efficient, cheapest. And it's interesting, even when you were talking about what are the types of investments that a foreign broker might provide access to that a U.S. broker wouldn't. It's a fairly thin list because many of I mean, obviously, it depends on what exactly you're including. The U.S. is by far the world's largest bond market. Lots and lots of foreign issuers will issue their bonds in the U.S. market in $1,000, $5,000, $10,000 denominations. All are trace eligible, so you know what the prices are. You're not going to get you're not going to get ripped off there. In terms of stocks, of course, the U.S. is by far the world's largest ADR market. So even like I was investing in airports of Thailand. So the owner of 6 airports around Thailand, and that has an ADR that trades in the U.S. over the counter, but almost any U.S. broker will be able to access it. And even most of the foreign brokers here wouldn't be able to access it unless I opened either a Singaporean brokerage account or one in Thailand. The one exception I might think of is, let's say, if you wanted to invest in Singaporean shares, for example, and some of those may not have ADRs. Singapore keeps their shares in a central depository called CDP, which you might think is actually a much safer, more robust custodian than even many US custodians, depending on what you think of SIPC. So if you wanted to hold your Singaporean shares in CDP, even some US brokers that are SGX members will hold it through a nominee. They won't even have the CDP account with your name on it. But then again, like you mentioned, is that if you have a CDP account as an American, they're not going to give you a 1099. You're going to be on your own for tracking every purchase and sale, every dividend, everything that those U.S. brokers that issue a 1099, Boom Securities, as you mentioned, they won't give you a 1099.
Right.
So if you have the 1099, it just makes that tax reporting 100 times easier. The other two things I might also mention, which we haven't talked about a lot, was FATCA and CRS. One of the advantages I've often said, well, for Americans, you have to do the FBAR and there's FATCA to make sure that all the information gets reported back to the US. And here in Hong Kong, there's also CRS reporting to the rest of the OECD. But FATCA doesn't apply in the US because a US account is not a foreign account. And the US is not a signatory to CRS. So the US is the one place you can open an account and they're not going to report to anybody.
Right.
So in a way, it's become the new haven of financial privacy, if that's what you're looking for, and that's why those brokerage accounts can be easier to open and cheaper to maintain. So,
yeah,
thanks for that question.
Yeah, no, that's a good point, actually. I mean, we do see more and more foreigners, looking to the United States to open up accounts, doing it via like a U.S. trust in South Dakota or whatnot. I mean, people that, potentially do value privacy, do look to the United States because they aren't signatories on CRS. I'm more of the opinion that, listen, the game is no longer, hide and seek. It's more show and tell. But, again, obviously, different people have different priorities, and the U.S., because they're not a signature on CRS, does have that advantage. You're right.
To that extent, I really like that quote: "Hide and seek versus show and tell."
Yeah.
I'll probably have to use that.
Yeah, I'll give it to you. It's going.
So cool. Should we make any other closing remarks? Anything else you'd like to cover?
No, I mean, listen, I think that there's just a lot of information out there. If anyone has any questions, they can feel free to reach out to me. In fact, I will try and
You want
bring
to
up.
put up your screen share right now?
Yeah, I will put up
So
my screen share.
those
Let's
of you
see.
who've made it this far, that was the technical issue we were trying to deal with earlier. So
Let's see this. I don't know. Hold on. Yeah, just to let everyone know, if anyone has any questions at all, they could reach me at globalexpatadvisors.com or onlinetaxman.com. Feel free to reach out if you have a U.S. Tax question, structuring question. We're on WeChat if that's a method for reaching out. But I'm happy to help. And if it is a U.S. Tax consultation, we offer either free consultations, or if it's more of an in-depth structuring question consultation directly with me, that's something that we offer that would be paid, but a credit towards future work. But if anyone has a question at all, just feel free to contact us. I mean, I'm also very, very open with my time, so I'm happy to just answer a quick couple questions over email at no charge as a courtesy. And just here to be a resource because, sort of as I've said multiple times, I think there's a lot of, misnomers out there. And we're just here to sort of clear the air with people because I think, if not, people's heads are spinning, Googling everything and trying to figure out these complicated tax laws.
oh yeah. Definitely don't want to rely on Google for that. So, well, in terms of being
Yeah,
generous with your
definitely.
time, definitely thank you very much for having this conversation, and thank you to those of you who've joined us. We've got that there, and I believe if you signed up, you should be receiving the email link to this recording by tomorrow. So, thanks again, and we look forward to our next event. Have a good evening.
All right. Yeah. Thanks, Tariq. Take care.
Bye.